Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Naked Brand Group. Is this Reddit meme stock worth investing in right now since they have a $50 million cash injection? Or should we avoid this overpriced, fundamentally flawed company? Let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell like your daily stock reviews and recommendations from an unbiased source. So let's get right into it. Naked Brand Group Limited designs, distributes, wholesales, and retails women's and men's intimate apparel and women's swimwear. The company offers its products under the Pleasure State, Davenport, Lovable, Bendin, Fayre Form, Naked, Vavroom, Evol Love, and Hickory brands, as well as through licensed brands, including the Heidi Klum and Fredericks of Hollywood. It sells its products through company-owned retail stores in Australia and New Zealand, online channels, and wholesale partners in Australia, New Zealand, and United States and Europe. The company was founded in 1947 and is headquartered in Auckland, New Zealand. Now let's look at some of the news of the company. So 2 weeks ago, Naked Brand Group closes about $50 million of registered direct offering priced at the market. The estimated net proceeds to the company from the offering are expected to be approximately $46.9 million. This is a much needed cash injection to a company that was just about to file for bankruptcy last month. So basically, they cleaned up their balance sheet just a little bit. And on January 21st, management will do a buyout of the retail Bendin store business overseas. This leaves Naked Brand Group with its online intimate apparel business. In addition, the MBO Group will pay off the Naked Brand's debt of 32.5 million New Zealand, which is $23 million US. That means the online group gets to keep 46.9 million in recently raised cash. However, we don't know how well the online business will do as a standalone business. Naked Brand announced in November its half-year to July 31st, 2020 results, but we don't know what management forecasts will be going forward. In other news, Naked Brand Group announces a transformative business restructuring plan focused exclusively on accelerating existing e-commerce platform, and it announces back on January 21st, 2021. Now, they said building a dominant e-commerce leader focused on the intimate apparel market, leveraging growth and synergies through mergers and acquisitions, investing in existing fast-growing e-commerce operations. Now, divesting unprofitable brick-and-mortar operations through the sale of Bendin, a subsidiary, to deliver a strong balance sheet and access capital markets to execute e-commerce growth strategy. So that's kind of some big news of the company, because basically with the Reddit short squeeze, they were able to hype up their stock price and then dilute the shares to get $46.9 million. And then now they're trying to restructure their organization right now. Let's go ahead and look at some of the fundamentals of the company right now. The company currently has a market capitalization of around $577 million with a current stock price of $1.23 a share. Now, earnings have declined about 17.6% per year over the past 5 years. July 2020 reported revenue was $82 million with a negative $44 million in earnings, with negative 53% profit margin. Now, shareholders have been substantially diluted in the past year. They were at risk of bankruptcy, but this has given the company enough cash for at least 1 year of operations. And it does have negative shareholder equity, which is a red flag for investors because it means the company's liabilities exceed its assets. Now, the stock dilution offer that just gave Naked Brand Group some time, think of it like a shot in the arm, to keep them going for just a bit longer. We can suffice to say, though, fundamentally, this company is flawed at the core. So what do the analysts say about this? Well, I couldn't really bring up any analyst reports because there aren't really any discussing this company right now. So am I a buy, hold, or sell recommendation on Naked Brand? Here are my thoughts. Now, first off, I have no position in this company, nor care to. I'm a conservative long-term growth investor, and I have never shorted a stock. Just FYI to all those who keep saying on the comments that I'm a shorter and I have a short position in any stock I cover, This company is fundamentally flawed and was about to file for Chapter 11 bankruptcy a few months back. But Reddit, social media, and Wall Street Bets forums changed all of that recently. This was a meme stock, short squeeze stock, nothing more. This was pure stock manipulation, pump and dump scheme, which I do hope the Securities and Exchange Commission come in and investigate the ringleaders involved in that. Let's briefly go over the thesis. Okay, guys, let's buy up all the stock and squeeze the shorts, but in the end, someone has to hold the bag while others sell out and tell everyone to keep buying. They make their profits, and unsuspecting retail investors are left with the bag of losses. For all the past 5 consecutive years, the company has net losses. Losses of $19 million in 2016 grew to losses of $35 million in 2020. Declined 23% in 2020 to $59 million compared to $76.94 million in 2019. Now we're looking at the free cash flow. It's also negative for all past 5 consecutive years. A negative free cash flow of $9.8 million in 2019 grew to a negative free cash flow of $15 million and negative free cash flow of $15 million in 2020. The balance sheet of the company is also weak. In 2020, the company reported $2.45 million in cash and short-term investments. The short-term debt for 2020 was $12.43 million, and the long-term debt was $24.21 million. So this shows that the company may face soon severe problems to pay off its debt. On top of that, the company was likely to be delisted soon back in January 2021. While the company needs $1 a share for 10 consecutive trading days to keep their listing status. What's worth is the recent stock dilution. So NAKD Brand Group announced the closing of that previously announced registered direct offering of 29 million shares at a stock price of $1.70, which was at market under the NASDAQ rules at the time. The stock dilution lowered the intrinsic value of NAKD Brand Group, which is already too expensive as is right now. The company has revamped its business model to focus more on e-commerce and has replaced its CEO as well. What remains to be seen, though, is if consumers still desire the product lines. Still several concerns there. If it doesn't deliver triple-digit revenue growth for the next several quarters, this stock will plummet back down to reality land, and I think it will. It already divested itself from the flagship brand Bendon. Now, NAKD has faced sustained financial distress for several years now. Reddit users have provided a shot in the arm, but the effect will only last a few quarters before the eventual plunge back down to the depths from which it arose, and I agree with that. Its strategic shift may pay dividends eventually, but it will lead to a loss of revenue and an increase in management costs as the company changes gears in the interim. The e-commerce segment makes just about $20 million in the United States alone. That's not enough to sustain the crazy market capitalization that we were seeing right now of $577 million. For long-term growth investors, here's my recommendation. I would avoid this stock right now at all costs. Way too much downside risk and any upside potential for the near term. For short-term growth investors out there that wanted this stock to go to the moon, I recommend an exit strategy to take your profits and move on. NAKD isn't a growth stock or a value stock. Its resurgence is the product of luck and one of the most extraordinary investing themes to emerge in years this year. Now, the bottom line, a meme stock with poor fundamentals, stock dilution, the possibility of being delisted. These risks are too severe, making NAKD Group brand stock one to avoid right now. If you have NAKD stock in your portfolio, best to take your profits before you get burned. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.